I'll check now. Sorry, I just need to make a note. So we're looking at question 2.
Yes, question 2 of October, November last semester, 2016.
Alright, so question 2 says, so the following information pertains to Stanford and Son CC, so it's a close corporation.
Correct. Okay, that's important because if you understand what form of ownership you're dealing with, then it's easy to do disclosure, right?
Yep.
Okay, so where do we start? We look at the required. Okay, we know this question is worth 25 marks, 30 minutes. If I look at the required asks for 2 things. Retained earnings of Stanford and Son. Where do you see retained earnings?
On SOCI.
Good. So now you know what to draw up. The SOCI with how many columns?
Oh, I don't know.
One column.
One column.
Yes. Okay, remember exam technique. You're not going to draw up the entire SOCI because then you're wasting time.
Alright.
In the exam, they're only going to be giving you marks for what?
For that column.
For the retained earnings column in the SOCI. It's 7 marks.
Alright.
Okay, so be careful with that because remember, it's 25 marks, it's 30 minutes. If you're going to be doing all the statements, you're never going to finish.
Yeah, okay.
Do I need to do the statement of financial position?
Yeah, the proper one. That's 18 marks.
Do I need to do the statement of comprehensive income?
No.
No. So again, don't waste your time doing the other statement if it's not necessary. Okay. Here we are going to use the templates just to help speed things up a bit. Okay. So I've already put the retained earnings heading there. Okay. You've got the template. I just need 1 column. Okay. You've got lots of columns. I just need 1.
All
right. And I'm going to need this statement of financial position. Assets, non-current and current, then total. Equity and liabilities. Equity, then liabilities, non-current and current. And then a total for equity and liabilities. Right, and now I'm going to be looking at the question. Where do I start with a question like this?
Sorry, I just want to quickly statement of equity. I just want to get the same templates. All right.
Where do I start with a question like this after having looked at the required?
Well, I would identify what elements each of those things are.
Perfect. Okay, so let's go down the line and then you tell me if it's important, yes or no. Okay. Is members' contribution important?
No.
Not for the SOCI, but is important for the statement of financial position.
All right.
Why? What do you see in financial position?
Equity.
Yes. Is this equity?
Yes, it is.
Good. So get your working mark for showing that. Members' contribution in brackets. 200 plus 270. Got that? See, there's easy marks just for knowing what something is and for knowing where to disclose it. Okay, so there's your first half mark. Half mark, half mark. I don't think they'll give you a full mark for each of these.
Okay, so
if they do, then that's very, very generous.
Okay.
It's probably a half.
Alright, well that's fine.
Yeah, next.
Alright, next is retained earnings.
Do I need it?
Jeez, no, I can't remember, Anthony.
Come, what is retained earnings? What type of account?
It's capital.
Yes. Okay, so it's equity. So I also need it.
Yes.
Okay, but the question asked me for retained earnings separately. So I'm going to put a note here, retained earnings bracket, C working. A.
Good.
Right, because that's what they asked me in point number A of the required. Okay, so what do? I go to the SOCI. Okay, I didn't put that in, SOCI. Right, because I drew it up. There's retained earnings in the SOCI, right?
Right.
Okay, is this opening or closing?
This is opening.
Correct. So get a mark for showing that as the opening balance for retained earnings. Make sense?
Okay, yeah.
Mortgage, what is it?
Mortgage is a long-term loan.
Good. Where do I put it?
It will be a non-current liability on 100%. The SOFP.
Get your mark for showing that there.
Okay.
225,000. mortgage. Investment, what is it?
125,000. Investment would be an asset.
Good. Which one?
Non-current.
Good. Investment. Bracket. Amount 100,000.
Yeah.
Next, land and buildings. What is it?
Long-term asset. Non-current
Good.
asset.
Open bracket 620. Next, loans from members.
Loans from members. That will be a liability.
Good. Which one?
It will be a current liability.
No, it'll be non-current unless told otherwise.
All right. From
100,000. Still with me?
Yeah, I am.
Okay. Machinery. What is it?
It's an asset.
Good.
It's a non-current asset.
Yes, that's right. Okay, you're going to need a few more lines here. Okay, they gave you quite a few here. Okay, so obviously in the exam, leave yourself space. Okay, so maybe do assets on one page and then do equity and liabilities on another page. And then if those 2 pages balance, then you know you've got it right.
All right, 100%.
Okay, next one, what is it?
Vehicles is also an asset, non-current asset.
Correct. Brackets 150. Get your half mark. Good. What else? Next.
Accumulated depreciation. So that is a negative asset.
Where do we put it?
Which we will deduct there at machinery.
Perfect. Nice. There you go. You got it. Minus how much? 80.
80,000. And the next one is the same, which we deduct from vehicles of minus 54,000.
Good. Next.
Next is inventory. That's not going to go on the statement of financial position. That's comprehensive income.
Ooh, careful. Inventory is what type of account?
It's assets.
Yes, so assets get disclosed, yeah?
Yeah, you're right, they do.
Non-current or current?
It will be current.
Yes. Inventory bracket 50. Okay, you need to know what the accounts are and you need to know where to put them. That's the key. Okay, so far so good. Debtors.
Inventory is 50. Sorry, I'm just going to make a note. Okay, so debtors is an asset.
Good. Which one?
It will be a current asset as well.
Yes.
6420.
200.
Oh, sorry, 64,200.
Good. Next.
Creditors controls a liability.
Which one?
Current liability.
Correct. Bracket 2750. Accrued expenses.
Accrued expenses. Expenses that I've occurred that I haven't paid, so it's a liability.
Perfect.
Current liability, ne?
Correct. How much? 11250.
Expenses.
Next.
11250. Next is a bank overdraft. So that's also a liability.
Correct. Short term.
Yeah.
2000. Next.
Overdraft 2000. Next is SARS. That's income tax. That will go to your statement of comprehensive income.
No.
Huh?
Why not?
No, I don't know.
Look at the balance.
It's a credit balance.
Okay, so what do you take to the statement of comprehensive income? You take the expense.
Yeah.
An expense will have what balance?
Expense will have a debit balance.
Exactly. So what is this?
This is a credit balance.
So what is it?
So
it's either capital, it's income, or it's a liability. It has to have a credit balance.
no.
So which one? Is it capital?
No.
Is it income?
No.
Is it a liability?
Yes.
Yes, there's the answer. SARS tax liability.
Okay. Under current.
Yes. 25,200. Distribution to members. What is this?
25,200. That will go to Sochi.
Good. Okay, obviously after your profit before tax. Or
Okay.
not profit before tax, profit for the year. Okay, then distribution. Distribution to members.
Profit.
Spelling.
Yeah.
Members. Okay, how much? 50, right?
Here. Distribution to members.
Happy so far?
Okay, so that is what, 50,000?
Yes, it's 50,000, yes.
Alright. 100%.
Okay, next.
Next is total comprehensive income for the year.
Is this important, Neil?
I don't think so.
It is, why? Where do you see the profit?
You see the profit on the statement of comprehensive income.
Well, yes, but where does it get referenced? Who's entitled to it?
From Sochi.
Correct. Okay, so I need to work this out, but as a separate calculation. Okay, so what is this? Total comprehensive income for the year. So profit before adjustments. Okay, because they tell you before any applicable information.
Okay.
Okay. Is that alright?
Okay. Before any applicable additional, so it's going to change somewhere along the line.
Well, depending on what you've been given, yeah.
Oh.
Okay, so 370 is going to be the profit before adjustments. Okay, and there you go. You've got all your easy marks.
Okay.
Okay, now we need to look at the difficult bit, okay, or the more challenging bit. Okay, it's not necessarily difficult. They will be easy and they will be difficult depending on the examiner. Okay. Right, so point number 1. You read it and you tell me what stands out.
Alright. So Stanford and Son CC purchased the land and buildings on the 1st of July. So that was half year.
Good. Important. Great.
So let me just make a note. Okay. So Quality Bank granted the mortgage to the CC on the same date at an interest rate of 10% per annum, payable annually in arrears. Okay. At 10% obviously. The loan is secured by the mortgage over land and buildings and is repayable in 5 equal annual installments starting on the 1st of July 2016. So, okay. The interest on the loan was correctly recorded in the accounting records and closed off to the profit and loss account. Sure. Okay, so it was recorded.
Good. Okay, so did you record the interest?
Yes.
Yes, okay, if you had to work it out, we can, because this is talking about the mortgage loan, right? Okay, so if I go to this page, there's the mortgage loan. Right, on your calculator, if you type 225000, times it by 10%, divided by 2, and what do you get?
Times 10% divided by 2. 11,1250.
Is that what we saw earlier for the accrued expense?
Yes.
Yeah, so do you need to do anything there? No, you've already done it. They've done it for you. It's correctly recorded.
Okay, perfect.
Okay, what do we have to do though?
Well, the 10%, that's exactly what we've worked out now. But we have to now accrue, I suppose, for the next half.
No.
No, we can't, because
Look
the year
at what I
end,
highlighted. What did I highlight here?
the loan is secured by the mortgage over land and buildings and is repayable in 5 equal annual installments.
Okay, so when are you starting these installments?
1st of July next year.
Is that within the next 12 months?
Yes.
Is that long term or short term?
That's short term.
Correct. So is this full amount long term?
Yes.
No.
Oh.
The
Yes,
full
why
amount
not?
isn't long term. A portion of it is paid 1st July 2016.
Yeah.
So what must I do? I need to subtract brackets 22,500, okay, divide by 5, because one payment is going to occur in the next 12 months. Do you agree?
Yes.
So
Okay.
short term mortgage portion.
Okay.
22,500 divided by 5. 45,000 is short term. So what's the difference? 180 is long term. There's the disclosure. See, don't lose those easy marks.
Alright.
Okay, all you had to do was just show short term, long term. Short term, long term. That's it.
So it's 45,000 and that then is 180.
1/5 of the 225.
So you deduct 45 from 225, gives you 180.
Exactly. Gives you the 180, which is the full amount, which is greater than 12 months, which is long term.
Okay, sharp.
Okay, and that's the end of number 1. Let's look at number 2.
Shit. So I just want to ask something. Obviously, if you didn't show the short-term mortgage at the bottom there,
then you would have lost 1 or 2 marks there. Yeah.
Oh, but I would still have recorded 225 on top. So hopefully, I would have still balanced.
Yeah, it probably would still balance, yes, but your disclosure is incorrect, and you're going to lose out on that 1 mark.
Yes. Okay. 100%.
Yeah. Okay. Next.
Okie dokie. Next is during the year, the land and buildings were reevaluated by a sworn appraiser at 800,000. This adjustment must still be recorded in accounting records. So our land and buildings was 620.
Good. So what are we going to do to it?
So it's going to increase it by 180 to 800.
Yes. Okay. So 800 must be disclosed there. Where am I going to put the 180?
So that will be 800. Well, I will have to. So do I have to record it somewhere else as well?
Well, it's going to affect what?
It's going to affect land and buildings.
Yes, and?
And your equity? No, not your equity.
Fair value adjustments.
Okay, yes.
Okay, land and buildings fair value adjustment.
Okay.
Okay, it's going to affect, because remember the profit was before adjustments, right?
Okay.
Have you taken this into account?
No.
No, so you must. So 180 is going to be added to that. Make sense?
Okay.
Do you agree?
Yeah, I do.
Okay, number 3.
7-1. I just want to make a note here quickly. And then fair value adjustment of 180. Alright, 100%. Okay, number 3 says, on the 30th of September 2015, the members of Stanford & Son decided that for the 2015 financial year, interest must be provided for on the loans from members at the rate of 15% per annum. So it's loans from members, okay, at 15% per annum. So that is that amount of 100,000 Rand.
Good.
Okay. On the opening balances of existing loans. So that's that. Okay, so yeah. As well as on additional loans that were received from members during the year. It was further resolved that the interest on these loans be capitalized. What does that mean?
Capitalized means added to the balance.
Alright.
Okay, so if I've got a loan, the loan amount is going to get bigger because it's capitalized. You're adding interest to the principal.
Okay, sharp. So on the 1st of July 2015, an additional loan of 20,000 was provided by R. Stanford and recorded in accounting records of the CC. This was the only additional loan from members during the year. So this is, but that we're talking about loans from members.
Yes.
Now it's a loan to a member.
No, it's right.
From members.
From members.
The additional loan of 20,000 was provided by R. Stanford. Oh, okay. So Stanford gave another 20,000 Rand to the business.
Exactly.
All right. Okay. The interest on these loans must still be accounted for. 60% of the loans from members are repayable on the 31st of December 2016. So that's next year. So we will have to do that fraction calculation again.
Good. See, there you go. You've got it. So you've thought about the disclosure there. Nice. Okay, so I need to go to the loans. Where do I see loans here? Where is it? There's it.
Non-current liabilities.
Good. Okay, so what must I do to get the correct figures? Give me your thoughts. What working are you going to show them?
Well, we have to, first of all, plus 20,000.
No.
Yeah, you gave additional 20,000.
Okay, but tell me, what tool are you going to use to get the answer?
A timeline.
Yes, see, that's the most important thing, is draw a timeline. What's the end of the year?
31st of December 2015.
Correct. Okay, so beginning would have been 1st of Jan, right? Okay, what happened during the year? Well, 1st July 2015, you got an additional how much?
We got an additional 20,000.
Correct. Okay, what's the balance of the loan?
100, well, it was 100, so it's now one.
It is 100. When is this balance applicable? Beginning or end?
End.
Yes.
Yeah.
Okay, so that's the picture. Do you see how easy that is? Draw a picture and then everything gets answered for you in the question in terms of the picture. Okay, so if you had 100 at the end and you got 20 during, what did you start with?
With 80.
Exactly. Okay, so now we need to work out the interest. So did you hold this 80,000 for the full year?
No.
Yes.
Oh, yeah, sorry, you did. Yeah.
Okay, would you pay interest on it for the full year?
Yes.
Did you hold this loan for the full year?
No.
No, so would you pay interest on it?
For 6 months.
Only half the year, yes. So interest is 20,000 times, what's the rate? 15% times 6 over 12, right?
So it's 20,000 times 10%.
15%.
15%.
6 over 12.
Yeah.
I get 1.5.
20,000 times 15% times 6 over 12 equals 1,500.
Yes, and then interest here, 80,000 times 15%, right?
Yeah. Equals 80,000.
12,000. Have you paid this?
No, I don't think so.
No. Is this going to be capitalized?
Yes.
Yes. So capitalized means added to the loan. So you're going to add 12 plus 1.5 to the loan from members.
Okie dokie. So loan from members. So we plus 12,000 and we plus 1,500.
Okay, and then they told you 60% of the loans are repayable on 31st December. Short term or long term?
Long term.
No. It's short term. It's within 12 months.
Within the next 12 months, so it's short term, yes.
Yes, so 60% is short term. So short term loans from members, 60% of 100,000, which is 60. Okay, so 60,000 must come out of here. Okay, so minus 60 there, loan from members, and 60 there. Do you see that?
60,000, yes. And there I minus 60 then. There, loans from members there, minus 60. Alright, great.
See, that's disclosure. See, when you read points like this, you must be thinking about disclosure. When you see dates within the next 12 months, it's always disclosure. It's easy marks. See, that's what I'm looking for if I'm doing a question like this. I want easy marks and then focus on the more difficult. See, this is the more difficult. Okay, and you managed to get that.
Yeah, exactly.
Okay, good. Happy with 3.
This is just so much easier than cash flow, so yes.
Okay, well, if you like this, then start with this, yeah.
Oh.
Okay, if you still need to account for the interest, where else must I put the interest?
What do you mean I must still account for it?
It hasn't been accounted for. That's what the question said.
But I added it there at loans from members.
Yes, I accounted for the capitalization of the loan, but I didn't account for what?
For the interest.
For the profit calculation.
Alright.
Okay, interest on loans from members. Plus or minus?
Minus.
Why?
Because I borrowed the money from members.
Correct. Okay, so you're going to have to pay them. Make sense?
Yep.
Good. Okay, next. How many points? Okay, we've got one more point. Okay, what happened here, Neil? Last point.
Minus 13,500. Okay, then the last point says, the investment consists of shares in Huis Limited, acquired at R5 per share. On the 31st of December 2015, the shares in Huis Limited were valued at R7 per share. This adjustment must still be recorded in the accounting records. But I never saw shares anywhere.
We saw an investment. They said investment in shares. Okay, so now we know what this is for. Do you see that?
Investment.
That's the shares.
At R100,000.
Yes. Okay, so where do we put that? We put that here. Okay, so did the investment go up or down?
It went up.
So how many shares do we hold?
So I would take that 100,000 and divide it by 5.
Correct. So how many shares do we hold? 20,000, right?
Yeah.
Okay,
Now,
how much are the shares worth today?
7. So it's 140.
Correct. Okay, so this must be 140, and then you're going to show a fair value adjustment.
Okie dokie, that makes sense.
Happy?
Yeah.
Got that. Where do I put the fair value adjustment?
At the profit calc.
Good.
20,000 times 700 equals.
Okay, and we've now completed the question. So now you get all your easy marks for totaling. Okay, so let's total.
So that becomes 140. And then I've got a fair value adjustment again. Adjustment. So that's 40,000, that fair value adjustment.
Yes, okay, so I sum up, I put my total there. My distribution stays at minus 50. Okay, happy with that?
500. So your profit for the year there, 577,500.
Okay, there you go. There's your 7 marks for the retained earnings.
And distributions to members. So that's minus 50,000.
Yeah, it didn't change. We didn't have to adjust.
Yeah. Okay, so that's 602,500.
Where does the 602,500 go?
So that's your balance.
Disclosure.
No, but where?
Statement of financial position. Remember?
Under what? Yeah.
You show equity on the statement of financial position, right?
Oh, of course,
Okay,
yes.
so go back. Where is it? There's equity. Where's my equity?
Yeah.
Here's my equity retained earnings equals. Where's my answer? There's my answer. Enter.
Oh, I see. So that retained earnings there would be that 602,500.
Does that make sense?
Beautiful, yes.
Okay, let's wrap up. Add and subtract all of the other stuff here. Okay, there's one total. Vehicles. Here's another total. Oh, hold on a sec. Why is my machinery so small? Something's wrong with my machinery. What's the amount for machinery?
I had 400,000 less 80,000.
Oh, 400. Sorry, I left out a 0. No wonder. It looks funny. Okay, it's 400,000 minus 80. Okay, 320. That's better.
Yeah, that's better.
All right. Inventory is 50. 64, 200. That didn't change.
Yep.
Okay, so non-current, I need to add up. Okay, so sum up all of this.
420.
Sum up the current. And then my total will be my non-current plus current. Okay, so I get that figure. Right, there's my total assets. Happy with the top bits?
Writing down here quickly.
Okay.
Total assets 1470200. 1470200. Okay. Perfect.
Okay, members' contribution, just sum up those two. I get that total. Add up the equity. I get that. That's my equity.
Okay.
Okay, my non-current liabilities, sum up those two. Okay, there's my non-current. Okay, and then I need to add up my current. So 2750, 2000, 250 there. Okay, equals sum up. Right, there's my non-current and current. Okay, so to get my total liabilities is non-current plus current gives me 397,700 total liabilities. How do I get total equity? I take this figure and I add that figure and I get the total.
Yep.
Okay, so let's hope we get the right answer. This plus that gives me what?
14702 on top. Beautiful.
Okay, are they the same?
Yeah.
Okay, so now you know you've gotten full marks for this question. Save.
Beautiful.
Okay, Neil. Happy with this one.
This is so much easier than cash flows.
Great, I'm glad. So start with this then. You just got yourself 25 marks. Remember, you left 1 mark out because of the disclosure, so I give you 24 out of 25.
Yeah.
That's brilliant.
That I can work with.
Yeah, anyone would take 24 happily, yeah.
Oh, exactly.
Okay. All right, Neil, happy with question 2?
Yeah.
Awesome.
10 easier than question 3.
Yeah, possibly. It all depends on your preference, yeah. Okay, so it just depends. Sometimes it's easier, sometimes it's more challenging. Okay, they gave you a nice question there for close corporations.
Yeah.
Okay, so on Wednesday, I'm going to be looking at this question. Question 1. It's also disclosure. Right, so if you like disclosure, maybe focus on it then in the exam. Okay, so if you have some time in the next 2 days or so, attempt it, try to do as much as you can. We'll obviously go through it in detail like we're doing today, and we'll discuss it. Can you even look at the time, Neil? The Skype call, only 32 minutes, and we've done the question. And how much time would we have spent on that question?
30 minutes.
30 minutes. Perfect. And that's even revising and discussing things and doing workings, and we still managed to finish it within time.
Oh, that's fantastic.
Okay, so if you like that section, focus on it. That's your strong point.
Yeah.
Okay.
Excellent. Oh, 100%.
Awesome. Happy, Neil?
Very happy. Thank you, Anthony.
You're welcome.